Hi, welcome to the Market Alert for Friday, the 13th of January 2023. So services CPI soars to highest in 40 years, real wages shrink for 21st month in a row. So that was the first news that came out. And it says there, not cooler than expected. Well, by the end of the session, the narrative had changed and so had the headlines. Soft CPI sparks dollar death cross, buying panic in bonds, Bitcoin and bullion. There is too much optimism in the market that inflation will fall. And doves rejoice, softer CPI cement expectations for smaller Fed hikes. So they're not going to increase rates so much, but they're still going to increase. And US stocks gained after softer CPI data supported case for less aggressive Fed action. And then the phoenix from the ashes, Europe has risen from the ashes, from the epicenter of all things bad to star outperformer. So let's have a look at the numbers that created these news headlines. Well, it's a fascinating read for sure, because it came out exactly the same as it did the previous month, for month on month, year on year, and also the core CPI. It's something that Paul Daniels would be proud of. I mean, the sleight of hand here is it's incredible. It's beyond magic. It's miraculous. You're telling me that through the whole of December there was no change in prices, inflationary prices, in the actual ones that they use. It's just staggering, absolutely staggering, and yet people will, buy into this and say, "Oh, this is fantastic," and all the rest of it. As you saw, we went from, 1 minute it's sourced to highest in 40 years to by the time we finished, Europe is risen from the ashes. You can't make it up. You really can't make it up. However, the only thing I would say is that the main news now for the start of the year is out of the way. The CPI numbers. Fed is 1st of February, I think, to decide on rates, so it's about time we saw a correction, which I'll come to in just a second. News for today, GDP month on month for the UK, that's forecast to be down. That's good, isn't it? And the FTSEs are nearly back to all-time highs. So yeah, let's have a look at the implied volatility, because this is the best indicator of a potential correction, and let's have a look at yesterday's number. So here we go, and this is a surprise as well, certainly for me. We've got a new low that's been made. The sideways move that we looked at yesterday has broken out to the downside, and this is generally an indicator that we're likely to see a correction, which if you look across to the left, you'll see there we had the start of a correction and then it continued. If you go out to the bigger time frames, like the 6 month, you'll see there we've got 1472, we're now at 1504. And this is the lowest it's been for some time. And again, when you get to these levels, you'll see how it's a precursor for the market then to correct. And if we go a bit further out to a 12 monthly chart, you'll see even more of this. So when we get to the low, you'll see the market starting to correct. Now, we did get a bounce back here before it corrects, and that's not unusual. We then got the increase, which found the support, brought the market back. And then we got the second wave down. But again, 1472, market moving lower and down, and then we've got 1504. We didn't get quite back to the highs in the Dow, but we have in the not far off in the FTSE and the DAX, because it's risen from the ashes, as we've just seen. So yeah, there's every likelihood that we could see a bit of a correction now, particularly given the fact that, of course, that there is no major news now until the 1st of Feb, when we get the Fed's decision on rates, how much they're going to increase by, whether it's going to be 1/4%, 0.5%, or 3/4. So let's have a look at the market's reaction, which is rather fascinating for yesterday. And we'll start off with the Dow Jones. So yesterday we see the Dow moving higher. It wasn't like that to begin with, which I'll show you in just a second, but overnight the market's struggling a bit. We traded towards that 78%, nowhere near the recent high, unlike the DAX, the DAX and the FTSE that have taken this out. The US markets have really held back by comparison to the European markets, and like I say, we're down a bit overnight. I'll look at the 30-minute chart, and there's your reaction. We sailed to the downside and then we moved to the upside. So let's just have a look at this, get some context in this. We moved down 453 points on the news, and then after the news we managed to get all the way up to the high there, of 582. So a 900 point plus swing from the downside to the upside yesterday for the Dow. Overnight, the market's above the DP at the moment. There's no economic news to move the Dow today to the upside, so maybe we'll see some sort of a corrective move. If not, then we're going to continue to move back up towards the highs. But the good thing is that the implied volatility has now put that trigger in place there to say that there is some sort of corrective move coming. In the German DAX, well, we just continue to move to the upside, don't we? In the start of the year, we're now up over 1,000 points, 1,109 points in the German DAX. Bit of weakness overnight, but yesterday the market continuing to move higher. Bit of supply coming in there, so the market's moved higher. There's been a bit of selling into this, as can be seen there. The 30-minute chart, there's the reaction. We dropped 150 points, and then we managed to come all the way back nearly 200 points for the DAX yesterday. It's just over. It's 175 points is where it came back, and then we've had a bit of a pullback overnight to the DP, where the market's currently finding some support. Has moved higher, but there's a bit of weakness around there at the moment. It's 10 minutes before the UK news on the GDP numbers. In the 5-minute chart, there you can see the overnight, the market just sitting on the DP, finding support. But we go back to yesterday morning, we saw the market moving to the upside, this time off the 200 MA, as prices moved higher, using the high then as support. And then we had the CPI numbers, where you can see the market's reaction down, and then straight back up within an hour, back down again, and then back up once more in the afternoon. I was actually short off the top here, and ended up getting stopped out at break even. I had to go out in the afternoon, just left the stop at break even open. It was good. This sort of weakness was going to continue, but that was optimistic on my part, wasn't it, given the market's trying to get back to the all-time highs. Nonetheless, it came back, took me out, but that's the way it goes. I should have put in some sort of profit-taking stop, but then saying that, it was already down at this level before I went out, so it wouldn't have made any difference. Market sideways throughout the evening there, a bit of a spike down, and then, like I say, at the moment the market's finding support at the DP, ready to move higher once more by the looks of things here. The high's not that far away. Wouldn't be surprised if we don't see the futures market try and move back to the upside first before we start to see prices move lower. Just to clarify on the implied volatility with regards to that break to the downside, like I say, just because that's happened today doesn't mean today will be the corrective or start of the corrective move. It can take a few days and even a week, so just keep that in mind as well. It looks, what we're saying is potentially there is a correction coming in this market given what it's done, and the implied volatility also showing that. The old adage is when implied volatility moves down into the lows, then something is likely to happen, just as much as when the implied volatility increases by 100% during the down move, then you will generally find a bottom in the market as well. In the S&P, just trading up to the 62% retracement, just through the 200 MA in the daily chart, sideways in the overnight. Again, the market's reaction is plain to see. It was down, and then we came back 89%, again sitting on the DP at the moment for the S&P. In the FTSE 100, different picture. We're heading still back to those all-time highs. Yesterday, another update for this market in the 30-minute chart. You can see we kicked off from the start up, and then we had the CPI numbers. The market then traded sideways, and overnight it's barely moved to the downside. So watch the high being taken out in this. In the weekly chart, you can see all of the resistance to the left has been taken out from November. And in the monthly charts, we're still heading up to that 77.90. The first target is 79.03. Is the all-time high for the FTSE. In the currencies, GBP, JPY heading down towards the 78% retracement there, following the the dollar moving lower. There you can see yesterday the case, and overnight continuing to move lower. Plus, there's bad news from Japan as well. which I'm just thought about that I saw in a headline this morning as well. In the pound, sideways to higher, as can be seen there. That's because the dollar's lower. 30-minute chart, there's the announcement. Incredible, isn't it? How they just use this announcement to also shake out stops and then move the market back in the direction that it was already heading. And monthly charts were above 89 there. Actually, that's not worth anything there. The monthly chart's just showing the market moving back to the upside there from that Liz Truss low of 103. Meanwhile, the metals enjoyed the CPI numbers. They moved to the upside. Silver moving there. The 30-minute chart showing the market moving up and then coming back down, and then moving back up. And then overnight, they're trying to head the market back to that $24 area. Very important area, as the market keeps struggling with $24. Gold also taking advantage, moving sharply to the upside as well. And there's your 30-minute move in gold. Gold isn't buying this nonsense, so you imagine that the majority of people aren't buying this nonsense. Finally, let's just have a quick look at the dollar's reaction to this yesterday. Dollar, that's the 30-minute chart. That's the reaction to the CPI numbers. It moved up and then has moved lower, and overnight it is also moving lower as well. Let me just have a quick look at the daily chart of this, and there you can see that the dollar is showing some weakness there at the moment. Okay, that will do it for this one. Let's see what happens today and see whether we'd get any sort of the start of any corrective move. I mean, without that, we should have at least a down day. There's got to be a down day at some point, but we'll just have to wait and see. Okay, that's it for this one. Have a great weekend. I will see you on Monday. As ever, thanks for watching. See you in the next one.